I let AI invest for me $5,000 from January 2015 until now, and this happened. Let me ask you a simple question. If you gave an AI just $5,000 back in January 2015, the early days of AI, and you did nothing, no panic selling, no buy high sell low, no emotional revenge trades. Being primarily a software engineer and having the right connections definitely helped. What do you think that money would be worth today? 10 grand? 20? 50? Because what I'm about to show you is either going to motivate you or make you slightly sick. And yes, this is based on real historical prices and real current prices. We're going to run the numbers like a real portfolio, like a real experiment, and I'll show you the final result at the end. But I need you to promise me something first. Don't skip ahead. Because the most important part isn't the final number. It's what happened during the journey, through crashes, fear, hype, and moments where almost any human would have quit. So here's the experiment. Start date, January 2nd, 2015. Starting cash, $5,000 strategy, AI-style rules, boring, consistent, unemotional. Assets, a mix of stocks plus crypto. Goal, run the portfolio from 2015 to now and reveal the results. Let's do it. The AI rules. Before we invest a single dollar, here's the rules I used, because if we don't define rules, it becomes a fantasy story. Rule 1, diversify, but lean toward growth. The AI isn't trying to guess the next meme stock. It's trying to capture long-term trends, tech, productivity, platforms, and a small allocation to new money. Rule 2, no trading, no predictions, no I think next month. No, I feel like it's topping. The AI doesn't feel. It follows the plan. Rule 3, buy and hold. We buy on day 1 and we hold, through drawdowns, through drama. Rule 4, fractional shares allowed, because modern brokers allow it, and it makes the experiment cleaner. Rule 5, ignore dividends and taxes for simplicity. In real life, dividends and taxes matter. But to keep this experiment understandable, we're measuring price performance and keeping it simple. Now, what did the AI actually buy on January 2nd, 2015? The AI portfolio, the Pix Plus allocations. The AI split the $5,000 like this. 25% SPY, S&P 500 ETF, stability plus broad market. 20% AAPL, Apple, dominant consumer ecosystem. 15% AMZN, Amazon, cloud plus commerce plus scale. 15% NVDA, NVIDIA, compute plus chips, the picks and shovels. 10% TSLA, Tesla, high risk, high upside disruption. 15% BTC, Bitcoin, asymmetric bet on digital scarcity. That's not a perfect portfolio. It's not optimized with hindsight. It's just a believable AI-style mix of index core plus dominant tech plus 1 crazy moonshot plus 1 crypto hedge. Now let's lock in the starting prices on January 2nd, 2015. SPY close at 215.43. AAPL close at 24.24. AMZN close at 15.43. NVDA close at 0.48. TSLA close at 14.62. BTC close at 315.03. And for today's now price, we're using the latest available market prices around Deck 19, 2025, market close for most assets on Deck 18. SPY price, 676.47. AAPL price, 272.19. AMZN price, 226.76. NVDA price, 174.14. TSLA price, 483.37. BTC price, 86.126. Now let's convert those allocations into actual units bought in 2015. What $5,000 bought in 2015, the receipts moment. Starting capital, $5,000. 1. SPY, 25% at $1,250 divided by 205.43 equals 6.848 shares. 2. Apple, 20% at $1,000. $1,000 divided by 24.24 equals 41.2541 shares. 3. Amazon, 15% at $750. $750 divided by 15.43 equals 48.6266 shares. 4. NVIDIA, 15% at $750. $750 divided by 0.48 equals 1,625 shares. 5. Tesla, 10% at $500. $500 divided by 14.62 equals 34.9997 shares. 6. Bitcoin, 15% at $750. $750 divided by $315.03. BAS, 2,3807 BTC. Now pause. Look at those numbers. Back then, this looked normal, boring even. But what happens next is the part that breaks people psychologically. Because the portfolio doesn't go up in a straight line. It goes up like a rocket and down like an elevator multiple times. So let's live through the journey quickly, year by year, like a real investor. 2015 to 2016, the boring years where discipline is born. The first 2 years weren't cinematic. No one was screaming to the moon. No one was posting portfolio screenshots. This is where most people lose interest. And that's important. Boring is where wealth starts. Bitcoin in early 2015 was basically a niche topic. Tesla was still seen as that risky car company. Nvidia wasn't a global celebrity, yet just a strong chip company. In other words, this portfolio looked like a random tech basket plus a weird internet coin. Most humans would have improved it by tinkering. The AI didn't. It held. Crypto mania and the first real temptation. Then 2017 hits. Crypto goes from niche to mainstream conversation. People start believing money is easy, and that's where the first trap appears. When your portfolio rises fast, you don't feel fear. You feel greed. This is usually where people take profits too early, chase even riskier stuff, or get arrogant. The AI doesn't get arrogant, it just holds. And while everybody is staring at crypto, Nvidia and big tech are quietly building momentum. The punch in the mouth. Then 2018 arrives and the market reminds everyone, you are not special. Crypto collapses from the mania. Tech gets hit. Volatility returns. This is where weak hands sell. This is where people say, I knew it. It was all a bubble. I should have taken profits. But here's the key difference. The AI never changed the plan because the plan was built for storms. And the only way a long-term strategy works is if you survive the years that try to kill your confidence. The crash that tests your soul. Then 2020 shows up. And suddenly, it's not just charts. It's real-world fear. Markets fall fast. Uncertainty everywhere. This is the moment where humans don't just sell. They sell because they need emotional relief. The AI doesn't need relief. It doesn't scroll doom headlines. It doesn't imagine the future. It just holds. And what happens after the crash is exactly why long-term investors win. The recovery is violent. Euphoria returns, and the second temptation. By 2021, the portfolio looks genius again. Tesla has huge runs. Bitcoin hits new highs. Tech is dominating. This is where investors start saying, why not leverage? Why not options? Why not borrow money? The AI is evolving. Doesn't borrow. It doesn't gamble. It just holds. And then, the pain year. 2022 is the kind of year that creates trauma. The kind of year where people quit investing entirely. And this is where a lot of AI portfolios would fail in real life. Not because of math, but because the human owner would override the system. They'd step in and say, stop the bleeding, sell the risky stuff, go to cash. I didn't sabotage it, which was the entire point of the AI idea. When I started this experiment, I pretend I lost the $5,000, totally forgot about it, kept updating the AI, but pretend I lost that money. Remove the human from the trigger. 2023 to 2025. The AI era pays the chipmaker. Then the world starts talking about AI nonstop, and the market does what it always does. It rewards the picks and shovels, not the hype, the infrastructure. Which brings us to the monster in this portfolio, Nvidia. Remember, we bought 1,562.5 shares, fractional, split-adjusted pricing, and Nvidia's price now is about $174.14. That's the kind of compounding that looks fake if you don't live through it. But now, it's time. Let's reveal the final portfolio value. The results. Let's calculate each holding today. SPY. Shares, 6.0848. Today, 6.0848 multiplied by 676 by 47 equals 4,116. Apple. Shares, 41.2541. Today, 41.2541 multiplied by 272.19 equals 11,229. Amazon. Shares, 48,6066. Today, 48,6066 multiplied by 226.76 equals 11,022. Tesla. Shares, 34.1997. Today, 34.1997 multiplied by 483.37 equals 16,531. Bitcoin. BTC, 2.3807. Today, 2.3807 multiplied by 86,126 equals 205,042. Nvidia. Shares, 1562.5. Today, 1562.5 multiplied by $174.14 2015 equals $272.94. Now add it up. Starting with $5,000, the portfolio is now approximately $520,000. Yes, about $500,000 from $5,000. And here's the part that matters. This wasn't day trading. This wasn't insider information. This wasn't leverage. It was a simple plan, a long time horizon, and the emotional discipline most humans don't have. The truth section. Why this worked. Now, I want to be very honest. I never imagined this would happen, and I pretend I lost those $5,000. This is a powerful result, but it comes with reality checks. Reality check 1. This is not guaranteed. Markets don't owe us this outcome again. Reality check 2. Nvidia and Bitcoin did the heavy lifting. If you remove the biggest winners, the result drops massively. Reality check 3. Most people would have sold. They would have sold in 2018. They would have sold in 2020. They would have sold after massive gains. They would have sold after massive losses. The AI part isn't magic stock picking. The AI part is not being human at the worst possible times. So, what's the lesson for you watching? It's not buy these exact assets. It's this. 1. Time is the real cheat code. The earlier you start, the more the math does the work. 2. You don't need perfect picks, just durable ones. A broad market ETF plus a few long-term innovation leaders is enough to change a life. 3. The biggest enemy is you. Most portfolios don't fail because of markets. They fail because of panic, ego, and impatience. 4. Compounding looks slow until it doesn't. The first years look boring. Then suddenly it's not. Now imagine this. What if instead of $5,000 one time, you added just $100 per month or $200? You're not trying to get rich tomorrow. You're trying to build a machine that works while you sleep. And yes, this is exactly why I keep saying on this channel, getting wealthy isn't complicated. It's just emotionally hard. When I started this experiment, I never even imagined I would have a YouTube channel. I haven't sold and won't sell any of my assets until I'm old enough and tired enough to retire. And if you enjoyed this, hit like, because it tells YouTube to show this to more people who need to hear it. Subscribe if you want more real money style experiments like this. And remember, the market doesn't reward intelligence. It rewards endurance. Stay awake. Stay aware. This is Felix. See you in the next one.